Bring that ass back like a boom, 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 boom.
Hey everyone, this is Supernova in your with Boom Traders weekly market overview, November 6th, Sunday. This is the 44th week of this year, and let's get it going. First, we have a disclaimer: financial products, including but not limited to futures, options, securities, forex, crypto, etc., involve substantial risk of loss and are not suitable for everyone. Past results are not indicative of future performance, and the information found in this video do not constitute an investment advice or solicitation to buy or short sell a financial instrument. This video is for educational and information purposes only. Now, just as usual, the session overview. These are the things that we will be discussing: the models, market price action for the indices, some internals, notes, sentiment, seasonality, and summary. Now let's get it going with the first topic, our models. The overall market model, or the general trend that we are currently looking at, is on sell caution. Now it's been rotating between sell caution and buy caution, and that probably indicates a good way what we think about the market. It's been going somewhat, up and down, up and down, up and down, no clear defined trend. So it's only normal that our overall market model will just be, switching between sell caution and buy caution. If we do find some trendiness, we'll either go to buy or sell, but since we don't have it, we're just switching back and forth, back and forth, back and forth, and it makes this market extremely tricky to trade. As far as the breakout model, we had it on caution for some time. Some breakouts have been working, but it seems that even those that have been working now with bios, especially the last few days, they started breaking to the downside. Early in the week and the past week, we had some high tide flags that were actually developing well and working out. They started breaking as well, so we just moved it to not working. So the breakout model is not working. And if you are thinking about long, mid, and short term, in terms of a range or a period of trading or investing, the long term is definitely on negative. The midterm is on neutral. As I said, this is perfectly reflected by our market model, and the short term turned negative. Now, I said that the Friday action to me looks more positive than negative, but nevertheless, we had a week with 4 down days and only 1 up day on Friday. Looking at the S&P, actually the S&P is also closed down on Friday. It just gapped pre-market, so we had then 5 negative days, and definitely the short term indicates this. So this is what we have for our market models. Now let's look at the market price action, starting with the indices. Starting with the S&P 500, here's the chart. It's a little messy, I know. I'll show you what these lines are all about. But what I have right here is the net new highs, new lows from New York Stock Exchange. And you can see there's been like a trend line. I mentioned that last week as well. There's been a trend line, decreasing the difference between net new highs and net new lows, and actually trying to go positive right here. We almost had like a positive day. I think that was Tuesday. But then came Wednesday and the comments from Jerome Powell, and it just all came crashing down, and we're again back in negative territory. As far as the moving averages are concerned, I think that everybody can see that we're below the 200-day, below the 50-day moving average, so it's definitely a downtrend. But what is actually more interesting to me is this chart is dating back from the COVID lows, and it's just a trend line drawn from COVID low to a recent low. And you can see that right here, this low, then it gets a rejection right here on top. This line acting as resistance. Same thing right here, and we get a rejection. Same thing right here, almost here, but definitely here, rejection. Same thing, this low, this here. This one did not actually provide any meaningful resistance. The bottom one, this one almost perfectly. You can see the red line right here. It's a COVID resistance line. And also we had this bottom right here. So that was a good place to short. I mentioned in the chat that this is a resistance zone. So loading up on longs, and of course having FOMC right here, this huge bar with the red arrow on top. Having FOMC right there, it was not a good idea to be either way, be it a short or long. You don't know what the market's going to do. But initially the market tried to rally, and then we had the comments from Powell, and then the market just sold off. Thursday gap down, actually held. It didn't really do anything on Thursday. We also told you in our Discord server we're expecting like low volatility here, nothing really happening. So Thursday was a pretty boring day. And then on Friday I was thinking that the market might reverse. It was gapping up. So basically everybody who shorted here on this Thursday was kind of screwed up. But this one didn't really get going. I mean, it just gapped up, filled the gap, full gap fell, and it just stayed there. So nothing here. I wouldn't dare to say whether this looks bullish or bearish to me. It just looks confused, sideways, no action. Here are the two levels that I have from options positioning so far into this month, 383 and 360 for support, so 383 is resistance. So we are in this range. I'm still not sure what to tell you, but and this is of course exemplified in our market model. It's just the market is not sure where it's going, but definitely on a macro theme, if you're looking for some improvement in the underlying macro topics that are driving the markets, we have absolutely none. So I don't actually see a reason for this market to continue, well actually not to continue, but to reverse and to go higher. I just don't see a reason for it. Apart from maybe crypto trying to rally, which is actually a positive sign, because crypto has been usually going hand to hand with the NASDAQ. Now we're seeing some divergence. Crypto is a risky asset, and if risky assets are going higher in prices, that means that there are people willing to put money into the markets, which might actually signal some sort of a reversal coming. But don't take my word for it. Trust the stocks, and more importantly, trust the stops. I'm just trying to interpret what I'm seeing in the market. Now let's go back to the chart and take you to NASDAQ, who's been really the weakest of all the indices. I don't spend a lot of time looking at Dow Jones, only 30 tickers, but it's been one of the stronger ones. NASDAQ, same thing, new highs, new lows is negative. We're actually trading here even below the 20-day moving average. 10-day moving average is also curling up and coming lower. We saw the same action on Friday, pretty much as with the S&P 500. We gapped up, but we closed below the open. Although we have this huge week, and then we have some support in terms of volume. Previous 4 days, you can see right here, is really all selling. This one shows us buying. I'm not quite sure what's the discrepancy between the candle and the volume, but it doesn't really matter. I mean, you can see it for yourself. It just doesn't look healthy. Net new highs, net new lows, you can see minus 260, and even on a day that's supposed to be going up, like leaving everybody who shorted on Thursday, we only have the advanced decline issues. We have 1.4 to 1, so 40% more advancing issue than a declining issue. So it's nothing changing. And when you saw the watch list with all the shorts, most of them are coming from NASDAQ. Most of them are coming from, as we said, software infrastructure, software application. So they are coming from NASDAQ, most of them. As far as IWM, we said it's been going into a channel, and if we just extend those channel lines to the right, you see what we have right here. Friday was actually a good, Thursday, I'm sorry, that was Thursday. Thursday was actually a good day for IWM, stuck between the 20, the sign line, and the 50-day. And then on Thursday, we actually gapped really nice, almost closed above the 10-day moving average. That's the white line right here. But still, I wouldn't dare to say this looks, bullish or bearish. What I know from experience is that rising channels usually resolve to the downside. So this is just another warning that I can give you. The market's not looking healthy, and no matter how you interpret it, as far as fundamentals, nothing has changed. So there's absolutely no reason to go long for the long term. So now let's take a look at some of the market internals. So the market internals, I'm basically using the same chart here. We have a couple of oscillators, and then we're going to look at a couple more things in the charts. But first is the comparison between NASDAQ Composite and the SPX, S&P 500, whatever you want to call it. Purple line is the S&P 500, and every time throughout the history of markets when the S&P 500 has been outdoing the NASDAQ, we've basically had a bad market for trading breakouts. So this is one thing that keeps me at bay all the time, having in mind NASDAQ needs to strengthen up in order for rallies to work a little bit better for us. As far as our oscillators that are based on advanced decline volume and issues, as well as the Zweig breadth thrust and the McClellan oscillator, mine are lower end but in the middle, so no extremes right here, so really nothing to do. Zweig is right in the middle, 53, 61 and a half being the top band, so really nothing to do with this. And McClellan oscillator is hanging out at the top band, trying to turn up again and go extreme overbought. So really nothing special here. And as far as the internals, put call ratio, you can see it's been going down with the recent developments. But since Wednesday we saw a little bit of a spike. 0.85 is like the mean right now, which is not extreme, it's just normal. Between 0.75 and 1 I would consider it normal. This is just another representation of the net new highs, net new lows. You can see both NASDAQ and the New York Stock Exchange are below the zero line, which for me is like the level that we need to push forward and above in order to see some positive developments in the market. Right here we have the VIX. It's been dropping, which is surprising, though this is one of the things that it's really interesting. We are not seeing a lot of put buying for the long term, so that's also releasing some of the pressure on VIX. But VIX is not just responding to what the market is doing right now. So this is a divergence, and one thing to look for, which makes it a little bit more confusing. So I'm not saying where the market would go, because usually what we will see if we have this comparison between VIX and S&P 500 or NASDAQ, and these are just Bollinger Bands or any type of bands that you can use. You can also use Keltner channel. It doesn't really matter. It's the same thing. Usually, if we have S&P 500 right around the mean here, which is the 20-day moving average, we'll also have VIX right around the mean. Okay, be it on the downside, since this is on the upside, but you can see that pretty much VIX and SPX are going hand in hand in reverse order. So this is actually interesting action from VIX. Now, what I have right here is the up-down volume for the four major indices, so New York Stock Exchange, NASDAQ, IWM, which is the Russell, and Dow Jones. And you can see that New York Stock Exchange recorded higher highs. You see up-down volume was better, and Dow Jones as well. NASDAQ was so-so, with Russell being the weakest on Friday. And you can see how this is moving right now. If you look at Friday, we have positive from all of them, but if you look at the average, which is this orange line, you can see that on Friday S&P 500 and IWM, which is the small caps, they were positive values, whereas NASDAQ and Dow Jones Industrial were negative values in terms of the average. What I have right here on this side is the advanced decline issues for NASDAQ, for New York Stock Exchange, NASDAQ again, IWM, the small caps, and Dow Jones Industrials. And you can see it on Friday, everything was positive. But if you're looking at the average, which is again this orange line, the Dow Jones Industrial was only just a couple of points above zero. And what is actually more important is that the NASDAQ, you can see the angle right here, NASDAQ, you see the IWM, S&P 500 is sort of holding, the Dow Jones Industrial is just dropping. And last but not least, these right here are two indicators that I found to actually work pretty well. This is the number of stocks above their 50-day moving average, and it's only for the S&P 500. So we have 0.57, so 57% of all stocks are above their 50-day moving average. And right here we have 35% of all stocks are above their 200-day moving average. That's the ticker. If you're using Thinkorswim, you can just plug that in and you'll get the same thing. So you can see that when they reverse, you can see that we usually get some momentum right here. Not, but this one was good. This one was right in the middle. Okay, so this one was really good right here. Here we had at the bottom. Right now we have a signal, but in order for this signal to be confirmed, we need to drop below that. So this one is still not confirmed. Anyway, values are just average. So 50% above the 57% above the 50-day moving average, and 35% above the 200-day moving average. It's average at best. So this is what I have for the internals. It's a mixed picture, with the biggest highlight probably being the way that VIX is handling this market right now. So I would keep an eye for VIX to see where it's going. If it continues to go downwards, I would probably think that actually on Friday we did something good and we can actually rally to the upper levels again, 383.5 for S&P 500. So right around here is my upper limit. But if VIX snaps back, I'll definitely be looking for 360 as support to the downside. So let me take you to some of my notes. And the notes are, well, not surprisingly, they're dominated by what Powell had to say after the FOMC meeting on Wednesday. Now, before we get into that, there was some sort of a notion, feeling within the markets that we might actually be seeing some pausing in the rate hikes. And although we did increase 75 points, which was the majority consensus, and we've been discussing this in our Discord server, I said wait until Powell comes to speak, because 75 points is just a reference, it's nothing more than that. But the way that the Feds are basically positioned, either being dovish or hawkish, is more important. And although the market rallied at first when Powell started speaking, it just came crashing down. So these are just three quotes from him. And the first one is probably the one that spooked the markets the most. It is very premature to be thinking about pausing. People, when they hear lags, think about a pause. It is very premature, in my view, to think about or be talking about pausing our rate hikes. We have a ways to go. And then he also said, as we come closer to that level and move further into restrictive territory, the question of speed becomes less important. I'm just going to skip to the bottom part. So that is coming, and it might come as soon as the next meeting or the one after that. No decision has been made. He was referring to slowing the rate hike, so probably for December or January. Our decisions will depend on the totality of incoming data and their implications for the outlook of the economy activity. Pretty much the same thing he said last time. But I think that the best thing that is driving the markets right now is the first quote. It's very premature to think about pausing. However, if you look at the Fed Watch, this tool that I've shared is linked a couple of episodes ago, you can see that 52% is the probability of a 50-point rate hike for the next meeting, with 48 being for 75%. So traders in the markets are positioned for a pause, or at least slowing down of the rate hikes for the next Fed meeting. As far as sentiment is concerned, we have the bulls and bears from the American Association of Individual Investors. This comes 1 week later, so the data is delayed. And we have 30.6 bullishness with 32.9 bearishness, so pretty much an equilibrium. I'm not sure that this is how it's going to go next week. I'm thinking it's going to go more to the bearish side, but nevertheless, you see bullishness is picking up, and that was pre-Fed. So we do have some, we did have some bullishness going into the Fed. As far as senior theory and greed index, we are at 59. Last week we ended at 60, but this is still greed. I mean, there's no fear present in the market. You see, 1 month ago we were at 30, and 1 year ago, same time, 1 year ago we were 72. So there is, some potential to go to the upside. Fear and greed index for Bitcoin, since Bitcoin moved past 21,000 now, has moved to 40. That's still the fear territory, but it's surprising, at least to me, that the money are being put into crypto right now. But this also is a good signal for risk monitoring. Basically, risk on is coming to the markets, albeit small quantities, but that's a positive sign. So we have 40 right now out of 100. Bitcoin is hovering about above 21,000. Ethereum snapped back above 1.6. So that's a good sign for the markets in general. And maybe this also comes into play with our cycle work. I'll just repeat them as far as seasonality goes. NASDAQ, it was, as far as seasonality from Ned Davis Research, it was supposed to, of course, nothing is certain, but in terms of seasonality, that's what usually happening here. Early October, and now we are already in November, so we might be seeing something. We already spoke about the fact that this might be a little bit delayed in time, but let's see how it goes. And for Dow Jones presidential cycles, this is the second presidential year is the worst one right here. This looks like October. November is, I think, we've already passed this point, but it looks like a point where we can rally up. So again, with the mixed signals coming from VIX and market behavior, but definitely the bearish macroeconomic levels, but also we have some positive things developing in crypto. It's a little bit of a up and down situation, so be careful. And with this, let's do the summary. The models, they're sell caution setups, more breaking down, markets reversing to the downside, put volume increasing, volatility is increasing, of course. I should have put this as decreasing because VIX is decreasing. I usually have it where the market's going down, volatility is increasing, but this is not happening this time. So this one is my bad. Volatility is decreasing, which is weird. Of course, we have recession and Fed hikes. Normal things. I put be careful right here, but I just want to stress this thing, and it's very important that you keep this in focus. Trade the stocks. Don't trade the indexes. Don't trade how they're setting up. Don't try to read the indexes that much. If there are stocks that are setting up and you have a proper buy point, take a shot. You can either decrease your size or tighten your stop loss. It doesn't really matter. Try the markets. If you're waiting for the indices to turn, most of the leading stocks will already be gone out of their basing structures and they'll be breaking out, and you're going to miss on those breakouts. So scan for those. Same thing with breakdowns. If the market is roaring to the upside, but the indices are roaring to the upside, but stocks are starting to break down, and you're thinking of buying long, but stocks are telling you a different story. Just either stay on the sidelines or just start shorting. You can actually do like call credit spreads with some defensive options plays, to capture some premium. But see what the stocks are telling you, and have the market on the sideline, but don't trade based on the indices alone, unless, of course, you're just trading the indices. If you're trading the indices, that's what you should be looking for it. So this is what I have for you for this weekend. I hope it's beneficial. Please watch the watch list videos. We have one for longs, one for short. They're pretty comprehensive. A lot of good setups for shorts mostly, but there are some good setups for the long side as well. If you like it, Be very helpful to like this video, subscribe. You can leave some commentary, and of course you can join our Discord server. We have an absolutely free tier, so you don't really need to worry about paying. Just come with us, join us, talk to us. We have a lot of really good traders there in our community, so it will be a fun ride. So I'll see you next time, and hopefully I'll see you on Discord as well. Take care and stay safe in terms of trading. Bye bye.